Hello and good morning, listeners. Welcome back to Almus Market Mornings, your daily dose of global financial updates. I'm your host, Swaraj Rajagopal, and we have got you covered on everything from currency shifts to pivotal central bank decisions and important speeches. Plus, you'll gain expert analysis on macroeconomic data that's shaping the market narrative right now. Join us for this episode and navigate the markets with confidence. After all the focus on budget, its major announcements, and debates on the rating of the budget, participants gently bring their attention back to what's going on in the global markets. The theme is nothing different, slow down, whether you think about the US, EU, or China. Today, data on the US GDP durable goods should keep everyone busy. Morning, JK, your thoughts on the markets and the upcoming data?
Good morning, Swaraj. It's yen that is in the limelight in the last 2 days. And what the billions of intervention could not do, a few sessions did it for the yen. Yen is down more than 5% now, and it took more than 2 months to build up that kind of a move. And what is driving it is the expectation of Fed rate cuts in September, going up almost to 100%. Even a second cut in November, probably 63%, and a 59% probability in December. So yes, 3 cuts possible now as per market discounting. This, along with the big slides in global stocks, particularly in US, has pulled the rug from under USDN's feet. The fall has gotten momentum after it has broken key technical levels, 100-day moving average and 21-week moving average, and now threatens a move to psychological 150 level as well. More weak data from US or stocks falling can only add to the losses. And of course, we have the GDP and weekly jobless claims today. And investors would be hoping that there is no sharp fall there, because that can intensify the weak sentiment in the market. And some things don't change in the market. One of them is that when yen gains, everything else loses. We had evidence of it when all currencies, major or yen, were losing somewhat against the USD, but majorly against the yen. Even gold has lost substantially overnight from 2430 to 2370 right now. Stocks in US had a very bad day, Dow falling 1.25%, S&P 2.31%, and NASDAQ a whopping 3.64%. The global index, composite index also has fallen by 2%. Asia sea of red today, Nikkei 2.5% loss leading the way. Now, quarterly results from some of the tech majors have added to the stock boost, and of course, the expectation from mega stocks is very high. And whenever there is a disappointment, particularly in a scenario where there is a concern about the economy, I think this kind of drop is very, very possible. And Nasdaq has dropped the most since October 7, 2022. The key level for Nasdaq, which is currently trading at 17,300 odd, is 16,800, and fall below that can actually push that into a correction territory. And as we all know, the Nasdaq rally or the tech-led rally has been one of the leading indicator for the stock market rally. Of course, what has gone up along with the yen is the option walls on the yen, volatility gauge. And also on the VIX, which is the volatility gauge of global stocks, has gone to 3-month highs. Now, on the data side, PMI data showed Europe and US are still struggling on manufacturing sector, but services were holding off in US particularly. As I said, we are looking forward to data today and tomorrow, the PCE number. Canada cut their policy rate by 0.25%, leading to further carry unwind in Canadian dollar against the yen. So there is all-round pressure on yen to strengthen, which is very clearly evident. Now, other driver was, one of the former Fed president of New York, Mr. Dudley, reversing his call on interest rates, and he's now worried about the falling economic growth. And he said the facts have changed, so I have changed my mind. Fed should cut, preferably at July meeting. So that's a big thing, and markets really have responded to those calls. We now have even the yield curve has started to steepen. 10-year and 30-year or higher, and 2-year is steeply falling about 11 basis points in the last 2 days, and that is driving the dollar lower against the yen particularly. INR also felt the weight of global risk aversion by trading new all-time low and a closing low as well as 83.7175, market indicating 83.75 right now. But of course, everyone looks up to what the central bank does. Yes, we have seen a lot of stability in the INR, but as someone mentioned, too much of stability is not good, and it can lead to some sort of a big instability at a later date. But I'm sure the central bank is also mindful of that, and there will be some flexibility in line with the global markets that will be allowed. Yes, we are in a very heightened volatility situation suddenly, and we'll closely be looking at the yen moves in the coming sessions. Thank you.
Thank you, JK. And I think in one of your statements, you summarized the entire theme of this today's podcast very well. When yen gains, everything else loses. And that's what's been happening. Equities across the globe are in a sea of red, and the expectations of rate cuts by Fed, and even, yesterday's rate cut by Bank of Canada, that has somewhere contributed to yen gaining. But rupee, of course, continues to trade at all-time lows despite all that is happening. As JK mentioned, too much of stability can lead to instability at a future date, but who knows? We'll keep tracking this story, and we'll keep tracking what's happening with the yen. That's it from us today. Thanks for listening. Tune in tomorrow for the latest in the financial markets.